Good afternoon, everyone. It's Brian Shannon from AlphaTrends.net, and today is Friday, the 7th of October, 2011. Let's take a look at these markets. If you wanted to be bullish about the markets, you would say that we had a failed breakdown this week, and from that failed move lower, we had a fast move higher. If you wanted to be bearish, you would point to the diminished volume on this rally and the fact that we're still below a declining 50-day moving average, and that we do still have a pattern of lower highs and lower lows. More objectively, maybe you would say that we're back into the range, and we do continue to show downside, however. So it's really difficult to gauge what's going to be next for this market. It's been a super volatile environment here the last 2 months, and it's not showing any indication that that's about to change at any time soon. So the market provides some tremendous opportunities for short-term trading if you're on top of the game and you're really aware and able to move quickly, which I think that this market is teaching a lot of people, is that you have to be able to move quickly. Otherwise, you're going to get run over in either direction. And we've basically gone nowhere for the last couple months, but when you look at the volatility we've seen, it's just been really tremendous. So there are good trading opportunities. Some people claim to hit every turn and every twist and turn, and that shouldn't really be your goal. Your goal should be to get a nice chunk of these pieces and to manage risk first and foremost, because they are difficult to trust, both long and short. I'm finding, but there's opportunity out there today. If you consider the pre-market move, you can see the 50-day moving average is at 117.99. If you consider where we were just after the jobs numbers were reported, we got up to a high of 117.98 intraday, or pre-market, that is. But here we see that the official session high was 117.25. So we ran up and basically tagged that 50-day moving average and then pulled back in as those gains, the pre-market gains, had been erased by the time that the market officially had opened at 9:30 a.m. So anyways, we don't have clarity in this market still. If the best thing you could say is that we're trying to build a base and we're becoming more neutral, but realistically, with all these moving averages declining, it is guilty till proven innocent still on the daily time frame and on the weekly time frame. We might look back and say this was a nice little flush out in here, and that's the way it's looking right now, because we see the heavy volume for the week. But where did the volume come in? We can look at a 5-day volume weighted average price for the SPY, and you can see that when we take into consideration Monday and Tuesday, we were below what had been at that point to the week to date volume weighted average price, but we're well above that. So for the week, the average price that the SPY traded at, adjusted for volume, is about 112.70, and here we are 3 points higher than that. So you can look at it as a victory this week for the buyers, but 1 week doesn't make a trend here, and especially again when we just look objectively at the definition of trend, lower highs and lower lows, we're still clearly in a downtrend. Next week, what we'll want to see, I think, is that we don't get back down below this low end of the range that we've been kind of flirting with and then had broken this past week. So I think right around in this area, basically 112 to about 112.50, that's where we're going to want to see this market continue to hold. We've got a nice cushion above that of about $3.20, so it doesn't seem like it's an imminent danger, but things happen very quickly in this market, and we've got that 5-day moving average now at about 113. Although the 5-day moving average, really, we've been just kind of oscillating back and forth above and below it quite a bit, so it really hasn't been a tremendously useful tool. And today, once again, we had this big volatility in the market. We had we had initial just kind of neutrality, then we broke down. The volume weighted average price held as resistance. We got back up through that, and they crushed it at the end of the day right down to pivot. So just regardless of what time frame you look at here, it seems we're seeing a lot more volatility, and again, there's no reason to think that's not going to continue. The Nasdaq made it down to that $50 level. I think 50.05 was the low for the week, and did finish, with a good percentage gain for the week, up 3%. Still down just about 1% year to date, and we can take a look at that. Here's the table, the year to date. We are. Where was my year to date? Oh, here, down 0.75%. So financials still down 26% year to date, basically. So we look at this, we're right up to the conjunction of that 20 and 50-day moving average, and we're still seeing lower highs and lower lows. But when you look at the weekly time frame, it's a little bit better because we had held the prior lows, but there's really, you can't look at it as bullish unless you're looking at for the week, and we did break this downtrend line here late in the day, but that is the move that failed with the S&P 500. Here was basically the break of that trend line that we were just looking at on the 30-minute time frame. We saw that trend line break, but then the failure of it as well. So we can just back it up to that 30-minute time frame. This is that trend line, and this was just the final hour of the day, basically here, where we had come back down. So I think that we want to see 52.5 basically would be the level we want to see hold, 52.5 to 53. If we don't hold 52.5 to 53, that's this level in here, then I think we look for another test of the $50 level, and it still seems as though maybe several months down the road we are going to see further pullback in here, but the other alternative scenario on a weekly chart is that we're kind of undergoing this type of consolidation before another leg higher. It doesn't seem like the realistic scenario right now, but again, you have to keep an open mind in this market. Complacency is what's going to kill you, whether you're long biased or short biased. This market is shown, again, tremendous volatility. The Russell 2000, which year to date is, where are we, down 16%, has been the weaker group and what's kind of been leading to the downside. We had seen that this market was the first to break its important support down at that 64 level. That broke pretty hard, and then we had that 6%, I think it was, rally on Tuesday, 6% in one day, and we held on to the bulk of those gains. We're back above that level. This is now 64 is what we're going to want to see hold next week if we break back down. Otherwise, we're going to be looking at a scenario that's similar to the financials with this first breakdown and that quick move up. Well, then it came down and made a lower low once again. So if we look at where we are, just freeze that image into your mind right there and go back to the IWM. Is this breakdown and move back up going to be similar to what we saw with the financials, where the first breakdown of the bigger support, that 1180 level, led to a short-term quick squeeze higher? We'll see. There's no one who can tell you with any certainty what's next for the market, but we've got near term, we've still got this little pattern of higher highs and higher lows. What we'll want to see, and that's the semiconductors, we've still got this pattern actually that was broken here, so I apologize for that. Somehow I got onto the semiconductors. But what we'll want to see in here is, again, probably the 64 level hold. If we break the 64 level, then we could be seeing some another continued breakdown. But similar to the Qs, we broke that downtrend line. We did it early this morning, and then sellers came in. So we had two drives lower in the Russell today. Next week, we want to see that 64 level hold. The semiconductors were up 22 cents today, and that finally got them positive for the week because they were underperforming and had shown actually that they were negative. And I've got to change the color of this, I just realized, right here. But they had been negative through yesterday's close, that is Thursday, but today's strength in here, which was curious because they were the one group that was up today. They were up 0.75%, but up to the declining 10-day moving average in here. And this is another group that broke a big level of support this week. basically gapped down to the lows and rallied up, and here we are. We want to see this market hold about 27 and a quarter next week. If we can hold above that, then this is our kind of line in the sand that we want to see held. Maybe our first little level would be at about 28, but 27 and a quarter, I think, is the bigger level we want to see the semiconductors hold next week. And of course, the financials continue to flirt with this 1180 level. They are still in a downtrend, though. I mean, we can look at it and say support's being held. True, but we still have a pattern of lower highs and lower lows. So there's nothing really to be bullish about here with these financials. They're still broken on the weekly chart. They're broken on the daily chart. The intraday, we've seen some strength here this week, but they've like the Russell, they've given up a larger portion of those gains than some of the other markets, and they really remain guilty till proven innocent here. So don't get too excited about one good week of percentage gains. I mean, the Nasdaq was up 3% for the week, the S&P up 2%, but we're still in downtrends in all these markets, and don't let your biases get in the way of making good decisions. That'll do it. Thanks for tuning in. Have a good weekend.